All right, team. Hope you had a great Valentine's yesterday. This is Thursday, the day after. Hopefully, you're watching it then. If not, happy Friday if it's not till tomorrow. But, guys, weekly rates, man, back up in the sevens, according to Mortgage News Daily. No bueno, team. And you guys know if you're in the mortgage business or been paying attention, we did get kicked in the face by an inflation number that came out. We'll talk about that more in a second. But you guys can see we did call it for the last week or so. We said rates would probably be drifting higher. And the good news is you see this blue line here. Man, we tested it. It held. It's the 200-day moving average. It's a big deal that we are above that. That is good. So hopefully the damage is done and we can maybe start improving here over the coming weeks. Why did we get punched in the face? Because, again, the inflation numbers came out and they were hotter than expected. The CPI basically said, like, inflation's still too hot. And what does that mean to us? It means that if the inflation's too high, the Feds will not be cutting rates as soon as they thought. So now the 50% chance has moved to like June instead of March. They're thinking maybe in June might be the first cut at that Fed meeting. So we shall see. All right, guys. This one we've been preaching forever. Tell your people, your buyers, anybody out there that mortgage buy downs are not worth it. We've been preaching it because, again, rates are coming down. Freddie Mac released this very obvious survey, but the reality is more than half the borrowers are paying discount points. A lot of that was last year. Sometimes they have to, I will admit that. But if they don't, our recommendation is grin and bear it, take the higher rate because you're not going to have that mortgage for very long. We think right now in the next 12 to 18 months, rates should be very, very good. So there you go. But the reality is they were paying discount points. I don't think they should do it because they're not going to have that mortgage for very long. This is just proof that shows what we've been preaching. Zillow for January, average days on the market, 29 days. Guys, 1 out of every 4 homes sold above the ask price. That's up more than it was last year, up 2.5%. And that is still up 8% from pre-pandemic levels. So again, it is still a great market, as we all know, and you've heard me say it over and over and over, and you know this too, inventory shortages. However, it ticked up 1.5% in December. That's still almost 40% lower than pre-pandemic levels. So think about that. Check this out. All right, side note, I got to admit, I put this in the wrong spot. Dallas, Fort Worth, good for us. We got the most construction jobs. If you're not in Dallas, Fort Worth, sorry, but things are still good here. The lock-in effect, as we know, the reason why that inventory I was just talking about, this is the percent, like nearly 90% of homeowners have a rate below 6%. So you can see the breakdown below, like 1 in 5, basically 22%, 1 in 6 probably, 1 out of 4, 1 out of 5, somewhere there, have a rate below 3%. So the good news, air quotes, good news, people get married, people get divorced, people have babies, people downsize, people die. That's not the good news. But the reality is there's a lot of reasons people have all-time credit card high debts. Those are the reasons why they will get rid of those rates. And when they do, any one of those things happen, it obviously encourages people to sell the homes. But check that out. I just thought that was a neat graph and neat stats. Check this out. This is the privately owned housing unit starts, meaning the builders are building homes. We are at the same levels from 1959. The number of homes being built right now are the same volume that it was done in 1959. 1959. Think about that. So back then, what has our population done? It is obviously, I think I saw the stats like tripled since then. So we have a lot of people, and the normal inventory right now, we have about 500,000 homes that are listed that can actually be moved into. The typical inventory is 2.6 million. Show this stat to your potential buyers and even to your sellers. It's a great time to sell. It's a tough time to buy. I get it, but it is still the right time because as soon as rates drop, more and more people are going to want to buy. Here's one other fun piece that is good news, bad news. Delinquencies, while they're up, because again, they times are tough, credit cards are getting maxed out, all that stuff. The reality is if foreclosures happen, again, don't worry about a bubble, because even if foreclosures happen, as we just showed you, inventory is down. But if foreclosures do, because recession, job losses, all the stuff that may come, the reality is the housing market's still going to be great because there are still way more buyers than there are sellers. So yes, if you saw this stat, like, oh no, delinquencies are up and foreclosures are coming. Okay, fine. That's good. Creates inventory. Our chasing excellence. So this is going to be the sales piece of the week. Last week, we did the digital chess timer. We'll send out the link if you guys want to track your time better. I do this. It's fun. It's humbling. It's embarrassing, but it's a good way to track your day to make sure you're truly doing the things you're supposed to be doing on your calendar. It's just really just track the amount of time. If you say you're going to do it, are you actually doing what you do? I've been slipping this week. My scores are low, but check that out if you have any interest. And then let's have some quick fun, guys. The most expensive house, 295 million. If this actually sells, it's in Naples, Florida, 9 acres. Holy smokes. Most expensive house apparently ever, that if it does in fact sell, good for them. If your girlfriend or wife asks you to peel an orange, it's a trap. I read this, not because I care about social media or trends, but because I don't want to be caught in a trap. So my PSA out there, just immediately look at them, say, I know what you're doing, and then you don't have to peel the orange. That's how I'm going to get around it if Carolina ever throws it my way. And then lastly, this was shout out to the marketing team. Freaking hilarious. I loved it. Is this self-serving? No, because I didn't do it. My team thought of it. Freaking awesome. It's so good. Anyway, congrats to the Chiefs. Guys, get social with us. Share, subscribe, forward it to people you know who want more of this. We appreciate you. Get that little Scantron up there or follow us on any one of these platforms. You'd really help us out, as always. And if you have any suggestions or needs for the future, let us know what we can do to help you on the mortgage front, marketing front, or anything else in life that you care about. We appreciate you. Have a great week. Bye.